Hello everybody, in this video we will be solving the ACCA F3 Kaplan exam kit. In this particular video we will be solving the questions on the sales tax, purchase tax and discount, and the next chapter, which is inventory. So these two chapters we will be solving the entire exam kit of Kaplan. Also we will be revising both the chapters quickly so that we will be able to solve the question. Before watching this video, make sure that you have watched the chapter explanation videos. So if you haven't watched them yet, check the description box below. I have linked all the videos and all the playlists in the description. So what you're supposed to do is, first you are supposed to watch the chapter explanation videos in the study text playlist. After watching them, you have to come to this and have a notebook and a calculator with you and solve the questions along with me. Some of the questions I will be discussing in detail, and some which are easy that I will not be discussing in detail because we will be revising the chapter as well. So first let's begin with our sales and purchase tax. So if you can recall what we have learned in the chapter, what did we learn? So we learned something. We learned that the first thing is that revenue is equal to sales. So this is the first thing which we have learned, right? And you remember we also saw something which is the opening inventory. And what is opening inventory? Opening inventory is the same as opening stock. Please make a note of the formulas as well, right? And you know that closing inventory means closing stock. These are one and the same thing, right? So, okay, maybe before we do inventory, let's first start with the sales. Okay, just ignore this. We will do inventory after we finish the discounts chapter. Fine. So first we will solve the exam kit of chapter 5 in our Kaplan, which is returns, discounts and sales tax. Okay. So first thing, what is the journal entry of cash sales? Debit cash, credit sales. We know this. This is the journal entry of cash sales. Now, what is the journal entry of sales return in this case? Debit sales returns or sales revenue, and credit cash because we are giving them the cash. What is the journal entry of a credit sale? Debit receivables and credit sales. And the same way, if you want to do a sales return, what are you going to do? If you have to do a sales return, it is going to be right. So I hope you are clear with these journal entries. Very easy, no doubt. And the same way, if you have to talk about purchases, what will be the journal entry of purchases? Debit purchases and credit cash because cash goes out, and if I have to return my purchases, cash comes in, so I'm debiting cash and credit the purchase return. And the same way we will go about with the credit as well, right? So I hope you are clear with these journal entries. After these, what are we supposed to do? So we knew that there were two types of discounts. If you can recall, there were two types of discounts. That's what we saw in the video. The first one is the trade discount. And the second one which we saw was a early settlement discount. And what was early settlement discount? Early settlement discount was also known as the cash discount. And which discount is applied first? Always remember that the trade discount will always be applied first. After that, we will apply the early settlement discount or the cash discount. Okay. When we talk about trade discount, in the how are we going to show it? We are going to always directly deduct the trade discount from the value and show the final value. You know this, right? the trade discount, we are always going to deduct and we are going to show the final value. Whereas in the cash discount, there are various situations which we saw in the explanation video. Right. Okay. And what were the different cases of settlement discounts? If you can recall, we also studied different cases of settlement discount. The first one is that the person who is buying from us, we expect them to take the advantage of the early settlement discount. So we expect them to avail. So since we expect them to avail, what will we do? If we expect them to avail, how will my invoice look? The list price is gonna be, let's say, 100, and if I have an early settlement discount which is 10%, my invoice will have the 90. Why is my invoice going to be showing the value 90? My invoice will have a value of 90 because we had expected them to avail. Since we had, while preparing the invoice itself, we expected that they will take the advantage of the sales discount. We have assumed that they will take the advantage of the settlement discount. So since we have already expected this, so my invoice will be of the expected value, which is 90, which is after deducting the settlement discount. Now, okay, so we expected them to avail. Now there will be two cases inside the expected. So the first case is we expected them to avail the discount and they have availed the discount and they have paid on time. Then what will the journal entry be? Nothing, it's just going to be normal. Debit cash, credit receivables, a normal thing, and since they paid on time, they have availed my discount just how I had expected. So my invoice was 90 and I will be receiving also 90. Clear? You recall all this? I'm not getting into the detail of it because I have already discussed this. Okay. The second is that they do so the B part would be they do not pay. So what does they do not pay mean? Do not avail the discount. So what does this mean that they do not avail the discount? We had initially expected for them to avail the discount, and that is why, since we have expected, so only we had the invoice also at the discounted value, but they have not availed the discount and they have paid late. So in that case, will they be taking the discount? Will they be availing the discount? No. So if they won't avail the discount, how much money are they giving us? They will have to give us the entire money. The entire money is 100. So now we'll be receiving 100 from them, but in my invoice I had only 90 as due. So you remember what the journal entry of that would be? So this is going to be debit cash, which is 100, credit receivables, which is 90, and credit revenue 10. I hope you can recall this. And credit revenue, which is 10. Okay, so this was the first part, which was that we expected them to avail the discount. Now, if we talk about the second part, which is we do not expect them to avail. So this was the second part, which is that we already know that they will not pay, or we expect that they will not avail the settlement discount. We have already expected, it's our anticipation that they will not be availing the discount because they will not be paying on time. Again, there will be two cases. The first one is they pay late as we expected. So however we thought, whatever we thought, as we expected, that is what happened, and they pay late. Before this, what would be the value of invoice? Since we expect, okay, just a sec. Since we have already expected that they will not avail the discount, so my list price is going to be 100, my discount is going to be 0. Why? Because we think that they will not pay early, so 100 will only be my invoice. So I will due the entire 100 rupees from them. Why? Because I know that they will not avail the settlement discount. So in that case, if the person pays late as we thought, the way we thought, that is what happened. So debit cash, credit receivables, as we expected he paid late, so he paid the entire amount. Now there can be another case, which is they pay early, which means suddenly they avail the discount, but we had made an invoice of 100 because we thought that they will not pay early. So in that case, how much money will they give? They'll give us only 90. Why? Because they have paid early, so now they are availing the settlement discount, which means it will be debit revenue 10. I hope you can recall it. And then credit receivables, which is 100 because the due amount or the invoice amount was 100. Okay. This was all the seller's perspective. And if we talk about the purchaser's perspective, so whenever we talk about the purchaser's perspective, it is going to be discount receipt. Whenever they get a discount, the purchaser will make an account which is discount receipt. So now after the revision, I hope that you are able to recall all the formulas. The reason why I'm taking out time and revising all the formulas is so that you answer the exam kit questions properly. So now it will be a bit easier for you. Okay, so the last topic of this chapter which is left is the sales tax. So you remember the gross value and the net value of the sales tax. So if I have a chocolate of 100 rupees and if the taxes on it would be 10, then my final value will be 110, right? So this is my tax value. So then what is 100? 100 is my net value and 110, which includes the tax, is my gross value, right? You recall this? So my gross value will always include tax, so that is why it is called as inclusive value, and my net value will be without any tax, so it is known as exclusive value. I hope you can recall this. Now there are two ways to calculate the sales tax. Always the percentage or the rate percentage of the sales tax will be given in the question. No doubt about that, right? Okay. Now we'll be discussing, I hope you have written all the formulas. Okay. So we have a case. If we have net value with us, net value is given. Now what is net value? Quickly tell me. Net value is always exclusive, right? So if the exclusive value is given with us, how to find the tax? The tax is going to be rate upon 100 multiplied by the value. So rate upon 100 multiplied the value will give you the tax in case the value is the net value. So when net value is given, what is net value? Net value is a simple value. It has no taxes included. It excludes tax. It's a plain value. Since it is plain, we will use a plain 100. This is how you can remember it, right? Okay. Now we have the second formula, which is when the gross value is given in the question. So in the question, gross value is given. Now what is the gross value? Gross value is the inclusive value. Why is it inclusive value? Because it includes the sales tax. Since it includes the sales tax, so it is not simple anymore. It includes the sales tax. Then what will be the formula to calculate tax? Rate upon 100 plus rate multiplied by value will give you the tax. Okay, simple. I hope it's clear. Okay, now if you can recall the buyer seller input output concept which we have discussed in the video, think about it. What was it? Whenever I make a sale, I collect tax from the people. When I make a sale, whatever tax I collect, that is what I have to give to the government, right? So I have to output, I have to give it out to the government. Every time I make a sale, whatever sales tax I'm collecting, that is something which I have to give to the government. So I have to output it, right? So that is my output tax. And every time I purchase something, I pay the sales tax, which means I have given input to the government. Every time I purchase something, I give the seller the sales tax. So that is what is known as my input tax. So now the net amount which is payable to the government is known as what you are supposed to pay. Output tax is what you are supposed to pay minus input which you have already paid. This will give you the net amount which is payable to the government. I hope you're cleared with that also. Okay. So when you're talking about purchase, it's always going to be the input tax, right? And when you're talking about sales, it's always the output tax. Okay. Let me quickly check if we're left with any other concept in the chapter or for revision. Okay. There's this simple concept. Now tell me something. If my input tax is more than my output tax, what does that mean? What does that imply? Input tax. The tax I have paid to the government is more than what actually I had to give to the government. Right? So which means the government will refund my tax. So debit cash, because the government will refund my tax, credit sales tax. Now, there's another situation wherein my input tax is there. My input tax is less than my output tax. So output tax is what you are actually supposed to pay to the government, right? Because that is what you collect on sales. So in this case, what happens? I have paid this much, but I have to actually pay more. So which means I have to pay more to the government, right? So debit sales tax and credit cash, because cash goes out. So I hope you have understood this concept as well, right? Tax paid on purchases. Okay. Tell me, what is the journal entry if okay. What is the journal entry of sales tax which I have paid on purchases? So this is my input tax, which is something I have paid to the government, right? So credit cash. So debit purchases. I have purchased something, and debit sales tax also, and credit cash. So right. So I will always put the net value of purchases, and here I will put the sales tax, and cash will be always be the total of what I have done. And the same way, if I have to write the journal entry of the sales tax charged on sales output. So this is the output. So in that case, what will I do? Debit cash, I have received cash, which will be the gross value, and credit sales, which is going to be the net value, and credit sales tax, which is something excess which I am receiving. So that is it. These are the concepts in the entire chapter. I discussed the entire chapter with you right now, and I have discussed all the formulas, all the journal entries. Now we have to solve the exam kit, and now because I've discussed this in detail, I will not be going into excessive deep discussion of each question. I hope you are also going to solve the questions along with me. Otherwise, there is no point of watching this video. Okay. Let's start with the question 67. Erin is registered for sales tax. During May, she sold goods with a list price of 600, excluding sales tax. So this 600 excludes sales tax. So if it excludes sales tax, this is the net value which is given to us, right? Excluding sales tax, and sold to Kyle on credit. As Kyle was buying a large quantity, if someone is making a bulk sale, we give them trade discount, right? Erin deducted trade discount of 5%. If sales tax is charged at 15%, what will be the gross value? Okay. Very simple. Very, very simple. So in the question number 67, right? Okay. We have a list price. What is the list price? I hope you have a calculator also with you. Is 600. This is the list price. And this is the net value. Since it is a net value, why? And it doesn't involve the sales tax, right? And you know that trade discount will always be deducted and we will not show it in the books, right? So since my list price is 600, and how much is the trade discount? Go to the question and see. 5% trade discount, right? So what is the trade discount? 5% of 600, which is 30. So 600 minus 30 will give me 570. So this is going to be my sales price. 570 is going to be my sales price. So one thing to keep in mind, the value after deducting the trade discount, on that only we calculate the sales tax. Okay. Now sales tax is to be calculated on 570. Sales tax is 15%. Now let's find the tax. Net value is given with us. Okay. So 570 into rate upon 100, since net value is given. So 570 into rate upon 100, which is gonna be $85.5. So this is my tax, which is $85.5. Okay. Now, what am I supposed to find in the question? I am supposed to find the gross value. So gross value is net value plus the sales tax, right? Because you will be charging the sales tax as well. So what is the net value? 570. So 570 plus 85.5, which is 655.50. So my gross value is 655.50. I hope you got the answer as well. I'm going to do it quickly, guys. Okay, 68. At 1st December 2005, Laurel owes sales tax authorities 23,778. So this much money Laurel has to anyway pay to the sales tax authorities. During the month of December, she recorded the following transactions: 800,000 sales, exclusive of 7. Okay, on sales, what do? Output tax, right? And exclusive. If it's exclusive, it's the net value. Purchases is always the input tax, and inclusive is always the gross value. So what are you supposed to do in this question? We need to find the balance on the Laurel's sales tax. If you have to find the balance, what are you supposed to do? Read the question again. You already have this much balance with you. So now you need to find tax here, and then you have to subtract them and find the net amount payable, right? And add it to this, and then you can see how much balance is actually left. So let us start with the question. So this much he already owes to the sales tax, right? So let's keep this in mind. What is given in the question? How much sales took place? 800,000 sales took place, and this is the net value which is given in the question, right? And 17.5% of sales tax. So if I want to find the tax, what it's gonna be? Rate upon 100, since net value is given, right? How much is this? 1,40,000. What is 1,40,000? So 1,40,000 is my output tax. Why is it my output tax? Because this is something which I have calculated on my sales. Okay. So now we got the output tax. The same way, how much purchases are given in the question? Go back and check the amount. Purchases are given, which is 590,790, and this is the gross value, right? Because why is it gross value? Because it is inclusive of tax and the rate is 17.5%. And I hope you remember the formula. It's going to be 590,790 into rate upon 100 plus rate. Now calculate it, you will find the tax. So my tax is 87,990. So this is basically my input tax. Why is it my input tax? Because this is something which I have paid on purchases. Okay. Now, net amount payable to the government. How do you calculate the net amount which is payable to the government? Output tax which I have to actually pay to the government, which is this, and how much I have already paid, which is 87,990, which is I have to pay this much more to the government. And what was the balance in my sales tax account? Go back. So I owe 23,778 also. So I need to also pay 23,778. So what is the total amount that I owe? 75,788. Okay. I hope you understood how I am doing it. If you have any doubt, please do the chapter again, rewind and watch it. Okay, let's go to the next question. If sales including sales tax amounted to 27,612 and purchases, okay, give me a second. If sales including sales tax amounted to 27,612, including sales tax, so this is my gross value. Purchases excluding sales tax, which is my net value. What would be the balance of the sales tax, assuming that all transactions are subject to 17.5? Okay, so I need to find how much net amount of sales tax which is payable to the government, right? Let's do that. Okay, question number 69. I hope you're writing and solving along with me. So sales are given with us and the gross value is given with us because it includes the tax, so which is 27,612.50, right? This is the sales and the rate is also given to us, which is 17.5. So let us first find the tax on purchases, tax on sales, which would be output. So how do you find that? 27,612.50 into rate upon 100. Why is it rate upon 100? It is rate upon 100. Am I right? Correct me if I'm not right. Think about it. The value which is given is gross value. So since it's a gross value, will I do 100 or 100 plus rate? It's gonna be 117.5. Right. I guess there's no doubt in this. So by doing this, we get the output tax, which is 4112.5. So this is my output tax, and in my question, I have 18,000, which is purchases, and this does not include the tax, right? It's given in the question, which means this is the net value. So how will I find the tax in this case? This is the on purchases, so this is the input tax. It's going to be 17.5 upon 100 multiplied by 18,000, since it is the net value. So the answer is going to be 3150. So now we have input tax and output tax. So how much was my output tax? 4112.5 minus input tax, which I have already paid. So this is going to be 962.5. So this much is due and this much is something which I have to still pay to the government. So my answer is 962.5. Unless and until you solve the questions along with me, you are not going to understand anything. There is no point of watching this video if you are not going to solve it. Okay, question number 17. The quarter ended 31st March 2002. Charles had taxable sales, net of sales tax of 90,000 and taxable purchases, net of sales tax of 72,000. Okay. So I have 90,000 taxable sales. when it says taxable sales means that tax is not included yet. Okay, so which means this is the net value and this is also the net value. So I hope you are understanding the questions and you know how exactly to read the questions. Okay, so we have 90,000 which is the sales and we have 72,000 which is the purchases. So since the net value is given, I just have to find 10% of 90,000 which would give me the output tax, and 10% on 72,000 which would give me the input tax, and then rate is given and I just have to do output minus input which will give me the net amount which is payable. Okay, and one more thing, in the question if we are ever given taxable sales, try to understand the actual logic in which is given in the question. What do you understand by taxable sales? By taxable sales, what does that imply? It implies that the sales are yet to be taxable. The sales are taxable, tax is not charged in it yet. So that is what is being implied. And I think now that you understood how to do this, the answer is 1800, which is payable. What is payable? Payable means which is the excess money which I have to give to the government. If it is receivable means that I have paid excess and the government is supposed to refund with me the amount. Okay, let's come to the question 71. A summary of the transaction of Ramsgate, who is registered to account for sales tax at 17.5%, shows the following transactions. For outputs 60,000 exclusive of tax. Okay, what does outputs mean? Think about it. Output means sales, input means purchases. We know that, right? At the beginning of the period, Ramsgate owed 3,400 to the authorities, and during the period he paid this much to them. Okay, so in any case 3,400 was to be given, right? So this is something which was due from earlier only, out of which he paid 2,600. Okay, so before we come to this part of the question, let us first try to solve this part of the question. Okay, so let's find the output tax first. Output tax, so this is exclusive of tax, which means the net value is given. So it would be 60,000 multiplied by 17.5 upon 100. Right, by doing this I get the output tax. What is the value? $10,500. Okay, now if I have to find the input tax, okay, input tax is given in the inputs are given 40 to 86, which is inclusive of tax, which means that is the gross value. So how will I find that? 40 to 86 multiplied by rate upon 100, 117.5, 100 plus rate, which will give me 6,000.042. So this would be my input tax, 6,000.0.2. So give me a second. Okay, so this part of the question is done. You have an output tax with you and you have an input tax with you. Now at the beginning of the period, Ramsgate owed this much to the authorities. Okay, and during the period he has paid this much. Okay, let us come to that also. Let us first try to find out in this situation how much did he actually owe. So what did we do? Input minus output. That's what we used to do so far. We used to do output minus input. What is due to the government minus input, which you have already given, would give me the net amount due. You remember that? So let us do 10,500 minus 6,000.042. What would that be? 10,500 minus 6,000.042. This would give me 4499.958. 4499.958. Okay. Do you think I'm right by what I did? First tell me, what is the input tax? This is my input tax. What is my output tax? This is my output tax. Okay. So this is my output tax, and from the output tax I have given the input tax, right? So what is due? I am due this much. I have to pay this much more. Okay. So from that, let's see. He also owed 30400, that's given in the question. So let's add that. 3400. He has to give this much more. So what is the total amount due? 3400 plus the whatever. Okay. So he is due 7899.958. This much is due. From this much, he has already paid 2600. So let's subtract that. That would give me 5299. Okay, I think we made a calculation error. That's fine. We'll just do this part again. Don't worry about that. So we are getting decimals. We made a calculation error. We are conceptually correct, but there is a calculation error. So let us do it again. Okay. So in the question, why is our answer not matching? That is because they have not included decimals. However, you can include the decimals. In fact, you are supposed to include 2 times of the decimals. So don't worry. Our answer was correct initially also, but let me just do it again. Okay. So what was our logic? We have input, we have outputs with us, and we have inputs with us. We know what inputs are and we know what outputs are. Right. What are outputs? Outputs are my sales and inputs are my purchases. So now exclusive of tax means the net value, inclusive of tax means the gross value. So it is simple to calculate the taxes. Use the formula, calculate both the taxes. Okay. So you get the output tax to be 10,500 and you get the input tax to be 6,000.042. Okay. Let us keep this aside. Now let's go to the question. At the beginning, Ramsgate owed 3,400. So Ramsgate anyway owed 3,400. Okay. Out of this money, he had paid 2,600 to them. Okay. Which means $800. So how much does he owe now? He owes 800 to Ramsgate. So whatever my net amount will be after calculating the above part, that I will add to 800. That would be the total amount which would be owed. Right. Simple. Now, how will I do that? What is my output minus input? 10,500 minus 6,000.042. Since it is 042, since 0 is in the first place, so these guys have not counted 042. If it was just 42 or it was 32, something like that, they would have counted. But in the question, the answer, they have not included the 0.04. Okay. So even if you write the answer with the decimal like we did earlier, that is also okay. But I'm just doing this to match it with the answer. So 10,500 minus 6,000 would be 4,500. Right. This is the net amount which is payable to the government. And 800 was due as well. So 4,500 plus 800 would be due, which would be 5,300. Okay. Are you guys clear with the answers? Take a moment and read it And if you have any doubt, you can drop it in the comment section below. I'll be happy to answer. Okay. 72. Which of the following statements best explains the sales account of a business which is registered to account for sales tax? Okay. It is credited with the total sales including sales tax. It is credited with total sales excluding sales tax. It is credited with total purchases including sales tax. It is credited with the total expenses including sales tax. Okay. Whenever I make a sales, what is my journal entry? Debit cash, cash is received. Credit sales, credit sales tax. You remember the journal entry? This is how I used to do. So sales was always separate from the sales tax. So does the sales include the sales tax? No. In fact, we are opening a separate account for sales tax, right? So sales always includes the net value, which means the value which does not include the tax. So it is credited with the total sales made, excluding the sales tax. My answer is B. A business sold goods that had a net value of 600 to Lucid. Okay, net value was 600. Let me just underline that. Net value of 600. What entries are required by the seller to record this transaction if sales tax is applied at 17.5%? First thing, let us calculate tax. Okay, 17.5 is the rate and this is a net value, which means it is not including the sales tax. This is the net value, right? So it would be 17.5 upon 100 multiplied by 600. This is how I will find the tax. So my answer is going to be 105. So my tax is going to be 105. Now let's read the question. What entries are required to made by the seller? We need to make the entry of the seller. Think about it logically. This is the journal entry. If you can recall, debit cash, credit sales tax. That is the cash sale entry. And if I want to make the entry for a credit sales, I will write the name instead of cash. Simple. So debit Lucid, credit sales. Okay, so the first entry is not correct. Debit Lucid, credit sales tax and credit sales. So 73 would be my answer. It matches with mine. B is the answer. Laker, a customer returned goods to steamer. So Laker returned goods, which is goods returns, to steamer that had a net value of 200. What entries are required by steamer to record this transaction if the transactions are subject to sales tax payable at 17.5%? Okay, 17.5%. First, let us find this. Find the tax. So what is the tax? Since it is a net value, I will have 17.5 upon 100 multiplied by 200. This would be giving me the value of my tax, which would be 200 into 17.5 upon 100 would be 35. So my sales tax would be 35. Let's read the question. So what entries are made by steamer? So steamer is the seller. Steamer is the seller. So you can recall the entries and it's very simple. I'm not going to get into the detail. So what will the journal entry be? When I had initially made the purchase, what happened? Debit purchase, debit sales tax. I'm sorry. We have to record it from whose perspective? Return to steamer. What entries are required by steamer? So steamer is the seller. Fine. So we have to write it in the basis of the debit Laker, credit sales and credit sales tax. This was my journal entry. Now I will just reverse it. Credit sales return, credit sales tax because I have to return the sales tax back to them, right? Debit later. So this would be my journal entry, no doubt. So what is sales return? Sales return is also return inwards because we are getting the returns back. And we know that the tax is 35, we calculated. So 74, my answer is A. Debit return inwards, debit sales tax, credit later. This is what we have discussed. Fine. Moving on, we have 75 with us. Stung, which is registered to account for sales tax, purchased furniture on credit at a cost of, okay, let me read the question again. Stung, which is registered to account for sales tax, purchase furniture on credit at a cost of 8,000 plus 1,200. 8,000 is the cost and 1,200 is the sales tax. What are the accounting entries? Okay, Stung purchased something. So this should be in the perspective of the purchaser. Okay. So my answer is going to be C. Debit furniture, since as it is increasing, credit supplier. And debit sales tax also. Why? Let's think about it. I have purchased the furniture. Debit furniture. Right? And my furniture actually costed me 8,000 only. The value of my furniture is 8,000. Debit sales tax. Why? Because I have also paid sales tax on it. And then credit cash or credit supplier, because in total I have paid 9,200. This would be my journal entry, and C is matching with my journal entries. Are the following statements about sales tax true or false? Sales tax is a form of indirect taxation. True. If input tax exceeds output tax, the difference is payable to the tax authorities. False. If input tax exceeds the output tax, then the government is supposed to pay to you, right? Sales tax is included in the reported sales and purchases of a sales tax registered business. False. Sales tax is never included in the reported sales. We know that. We always create a separate account for sales tax. Sales tax cannot be recovered on some purchases. That is true. In some purchases, what happens? We cannot recover the sales tax. Based upon the following information, give me a second. Okay. Based upon the following information, what was the cost of purchases? Okay. Opening trade payables, cash paid, discount receipt, good returns, closing trade payables. So we want to find the cost of purchases. Fine. Opening trade payables and closing trade payables are given. Since both of them are given, let us just open a trade payables account. Okay. Let me open a trade. Let me just go there. So I have to open a trade payables account, right? Because why am I opening a trade payables account in this question? Because the opening and closing balances of the trade payables is given in the question. If both the balances are given in the question, it is easy for me to basically do it. This is my debit side. This is my credit side. You remember the journal entries? You know how to do it? Particulars amount. Okay, now trade payables. Think about it quickly. Is it an asset or a liability? What is trade payables? It is a liability to the business. Trade receivables are an asset, but trade payables is a liability. What balance do liabilities have? Liabilities always have a credit balance. So my opening balance will come on the credit side and the closing balance will come on the debit side. Okay. Opening balance and closing balance. Now let's just write the values. So my opening balance is 142600 given in the question. My closing balance is 137800 given in the question. Moving on, cash paid. Cash is paid. So what do you understand by cash paid in the case of trade payables? What happens to trade payables? I pay them the cash, right? Usually this is the journal entry when I am paying off the trade payables. This is my journal entry, debit trade payables to credit cash. So what happens in this? Trade payables was getting debited because we're paying off the cash. So just the same thing. Trade payables debit cash. That is why I've written on the left side. I hope there is no doubt. Discounts received. Okay. Whenever discounts are being received, do my trade payables increase or decrease? Connect with the concept. When I receive a discount, my trade payables reduce. Now I have to pay lesser amount, right? Since the balance of trade payables is credit, if it increases, we will credit it. If it decreases, we will debit it. So discount received 13200. Okay. Goods return. Okay. Goods return. Trade payables means something we have bought. Because of that, we have to pay. Now, if I return the goods which I have bought, will my trade payables increase or decrease? It will decrease because now I gave back those goods. So since it will decrease, I will write it on the debit side because my trade payables are decreasing. So 27,500. Okay. Is anything else given in the question? Everything is done. We need to basically find the purchases. Okay. Now when I purchase something, what happens to my trade payables? Does it increase or decrease? When I'm purchasing something, when I make a credit purchase, my trade payables increase. So my purchases will come on the credit side. Why? Because my trade payables are getting credited because they are getting increased. So that is it. Now purchases will be my balancing figure. So this we can just normally do the balancing. I hope you are understanding all the questions. So my purchasing figure will be 578200. This is my balancing figure. Okay. This is my 578200. Okay. 78, you are given the following information. So we have receivables with us. Okay, let's just quickly see how many questions are there in this chapter. Okay, in this particular video, I think I will not be able to complete inventory. So we will be starting with inventory and let's do till 90. Let's do till question number 90 in this video, and after that we'll be moving on from 90. I hope that's not a problem. Okay, you are given the following information. Receivables as at 1st January 2003 is this much. 31st January, so this is the opening receivables, this is the closing receivables. Total receipts, whatever you have received this year, is in 85,000. This also includes a cash sale. Okay, now you have to find the answer. What am I supposed to find? Sales figure. Keep in mind, opening receivables and closing receivables is given. What does that mean? I have to open an account only. Simple. Since I have receivables, I am opening a receivables account. As we have discussed in the previous question, what is the balance of receivables? The balance of receivables is debit side, right? Because receivables is an asset. So opening balance given in the question, what was it? 10,000. Closing balance is also given in the question. What was it? 9,000. Total receipts during the year 85,000. So 85,000 was what was received during the year. Now when I have received the cash from my receivables, when my debtors pay off their money, then their accounts get closed, right? So when I receive the cash payment, the receivables decrease. That is why I am putting receipts on the credit side, because my debtors decrease. Since the receivables balance is debit, so if it increases, we will debit it, and if we have to decrease it, we will credit it. 85,000. Okay. Now in the question it is mentioned including cash sales, but this we will not make a separate entry. Why are we not making a separate entry? Because it is already included in this value. So if we again show it in the question, if we do it again, then there will be an error in the balance. Okay. Now nothing else is given in the question, right? So we will just be doing the balancing figure. So sales, so when I make a sale, my receivables increase. So if my receivables increase, it will come on the debit side, right? So now we'll just do the balancing. 94,000, and the value of my sales is basically 84,000. Okay, that's it. Pause the video and write it if you haven't. I'm erasing it. I know I'm going a bit fast, but I'm assuming that you know the chapter very well, and I'm assuming that you watched all my previous videos. That is why I am going fast. So we just did 79. Let's move on. Did we do 79? Okay. We did 78 right now. Fine. P is a sole proprietor, whose accounting records are incomplete. All the sales and are cash sales, and during the year 50,000 was banked, including 5,000 from the sale of a business car. He paid 12,000 wages in cash from now and withdrew 2,000 per month as drawings. The cash in the till at the beginning and the end of the year was 300 and 400 respectively. Okay. So again, in this question we have the opening balance and the closing balance of the cash. So in that case we will make a cash account, debit side, credit side. Don't worry, whenever you see a question like this, just make the account. And what is the balance of cash? Cash is an asset, so cash has a debit balance, which means if cash increases, I will debit. If cash reduces, I will credit. Why? Because cash is an asset and the balance of asset is debit. Okay, so opening balance and closing balance are given. So opening balance would be 300. Why? Because cash has a debit balance since it is an asset, and closing balance would be 400 respectively. Next, let's go step by step. All the sales are cash sales, and during the year 50,000 was banked. 50,000 was banked, which means bank has been increased. So when you put your money in the bank, cash in hand reduces, right? So cash is getting credited in bank 50,000, including 5,000 from the sale of a business card. Let's come to that. He paid 12,000 wages. He paid 12,000 wages in cash. This would be the journal entry for wages. So when I am paying wages, cash goes out. Since cash goes out, which means cash is getting credited since the balance is reducing, right? Okay. Withdrew 2,000 per month. So when you're withdrawing this much money every month, so 2,000 into 12, 24,000 they withdrew in the entire year. When you're withdrawing, that is called as drawings, your cash goes out. So 24,000 of cash is going out. Okay. Now, what am I missing? Think about it. 5,000 sale of a business card. This is also something which needs to be mentioned. Even though it includes it, you need to keep in mind that before putting it in the bank, you need to mention that you have received it in cash at some point, right? That should also be mentioned. So cash to proceeds, which would be 5,000. Now we are supposed to find the sales revenue. When you debit cash, credit sales, this is the journal entry, right? So this would be the balancing figure. I hope you can do the balancing by yourself. So 79, our answer is gonna be C. Okay, moving on to the question number 80. The following transactions took place during Alan's first month of trading. Credit sales of this much exclusive of sales tax. So what is this? This is the net amount. Credit purchases inclusive. So this is my gross amount. Cash payments to credit suppliers this much inclusive of sales tax. So this is again gross. All transactions are subject to sales tax 20%. What was the balance on Alan's sales tax account? Okay. So first of all, let us start solving this systematically. Okay. Credit sales of 121,000 exclusive of sales tax. So what will my tax be in that case? $24,200. This would be my tax, right? And what would this be? This would be my output tax because I am calculating it on sales, right? So let us first write down our taxes. So now we have the sales tax, which is 24,200. This I have calculated, right? After this, what will I do? Purchases. Let me calculate for purchases as well, the same way I did for sales. Okay. So 157,110 is the gross sales. So 20 upon 120, 26,185. This is my input tax because it is charged on purchases. Okay. So now we got the tax in both purchase as well as sales. Cash payments to credit suppliers of 82,712 inclusive of tax. Let's keep this aside for a while. All transactions are subject to 20% sale tax. Okay. So how much is payable? What is my output minus input? My output minus input would be 24,200 minus 26,185, right? And this would be my output. Now take a moment and try to calculate the difference quickly. I'm giving you a minute. Okay. So what is my balance? 1985 minus 1985 would be my balance. What does this mean? This means I have paid excess and this much is to be refunded by the government, right? So what is my usual balance of sales tax? Debit balance, right? But here 1985 needs to be refunded. So my balance is the credit balance. I hope this much is clear. Now let's go back to the question. Cash payments to credit suppliers of 82,710. Okay. Before even getting into that, since it is cash payments, let's ignore it. It's 1985, debit or credit? Again, please think about it properly. What is the usual sales tax balance? It is debit. Why? Because this is an expense, right? Now in the question, this much is to be refunded, right? This much is to be refunded. So when someone refunds the money, what is my journal entry? Think about it. This is my answer, right? Now read the question. We have a minus of 1985, so this much is to be given back to us. So is this gonna be a credit balance or a debit balance? I hope you got the answer. I hope you understood how we did this. What is the balance of sales tax? Sales tax is this is something which we are receiving. We are receiving the money back, right? So we are debiting it. The balance on the account represents an amount which is due to Alan. So this is gonna be my asset, right? Because this is something which is due. This is gonna be my asset. So it will be on my debit side since it is my asset. If it was something which I had to pay, then I would have credited. Okay? I hope you understood. 81. Which of the following statements is correct? Carriage inwards and carriage outwards are both accounted for as an expense. A is my answer. Jupiter returned unsatisfactory goods to Saturn. The goods had been sold on credit by Saturn as 100 plus 20. What are the accounting required by Saturn? Okay. Saturn is the seller. So seller is getting the items back. What will the journal entry be? Sales return. You know the sales return entry, right? So my answer is C. Debit return inwards. Debit sales tax, credit Jupiter 120. Eric is registered for sales tax. During October, he sold goods with a tax exclusive price of 800. Exclusive. So this is my net amount. As Kevin is buying a large quantity, so when someone buys a large quantity, they are given trade discount. I hope you can recall that. Eric reduced the price by 8%. Eric accounts sales tax at 25%. One thing to keep in mind, sales tax is always charged after deducting the trade discount. On that amount, you are always supposed to calculate the sales tax. Okay. So 8% of 800 is 64. So 64 is gonna be my trade discount. So out of 800, 64 is my trade discount, right? So 736 is my price after trade discount. So price after trade discount is 736. Okay. What after that? Now let's find the tax on the value after the trade discount. 25%. This is the net value. So 25% of 736 is gonna be 184. So my sales tax is 184. You need to find the gross value. So what is the value? 736 plus 184. This will give me my gross value. I hope you're solving it along with me. So the answer is 920. Okay. Now 84. ABC company sold goods with a list price of $1,000 to Smith, which was subject to trade discount 5% and early settlement discount, which is the cash discount of 4% if the invoice was paid within 7 days. The normal credit period was 30 days. At the point of sale, Smith was not expected to take advantage of the early settlement discount. If Smith subsequently paid within 7 days, then what would happen? Okay. So the thing is, what have they exactly told you? They told you that Smith was not expected to take the benefit of the early settlement discount. That means my invoice will be of the full value because we think that Smith will not pay on time, but Smith pays on time. Okay, you remember this case? We have discussed everything. So what is my answer? Debit cash. Cash. Smith will give me cash. Smith will give me less cash only. Smith is not going to give me more cash, right? Now he will give me the price which also deducts the settlement discount. So firstly you have the value which is given in the question, which is 1000. From that minus the trade discount, and on that you have to calculate the settlement discount. So debit cash, and since basically it's a loss to the business, so we are debiting revenues, it will get deducted from my revenue. Credit trade receivables 950, because initially my invoice was of 950. Why? I have only deducted the trade discount. When I prepared the invoice, I thought that this person will not take the benefit of the cash discount, but he still did. So my answer is gonna be C. ABC company sold goods with a list price of 2000 to Jones, which was subject to trade discount of 5%. Okay, 2500 to Jones, 5%. So let us find the price of the goods after deducting the trade discount first. Okay, so what is 5% of 2500? It is 125. So 2500 minus 125 will give me 2375. This is my value after deducting the trade discount. Now if I deduct 4% on this value as my settlement discount, so what is 4% of 2375? 95, right? So if I'm deducting 95, then my final value will be 2280. So this is my value after deducting trade discount and cash discount. So what is cash discount? It is the early settlement discount. Okay, now what are we supposed to do? Try solving the question and then I will discuss. Read the question properly. Jones subsequently paid within 7 days. Okay, and Jones was expected to. So he has also paid during the time and he was also expected to do the same. So my invoice will be prepared of this much and this much is only received, right? Debit cash and credit trade receivables. This would be my answer, right? Think about it. Sorry, not this value is incorrect. 2280 is over here. Debit cash and credit trade receivables. What we had expected, that only happened. Okay, so I hope you are clear with it. Okay, ABC company sold goods with a list price of 4500 subject to trade discount of 5% and early settlement discount of 4%. Black was expected to take advantage. Okay, so he was expected to take advantage, but he did not pay. So in that case, what will my journal entry be? I hope you can remember this exact case as well. My answer is gonna be D. So debit cash. Now I'm going to get the entire cash. Credit trade receivables, but my invoice was of the one which was discounted, so I will credit my revenue as well. ABC company sold goods with a list price of 3700, trade discount 5%, early settlement discount 4%. The normal credit P at the point of sale, White was not expected to pay early, so which means my invoice will be of full amount. As expected, he did not pay, so my answer is just going to be debit cash, credit trade receivables with the full amount. Okay, so my answer is going to be debit cash, credit trade receivables with the full amount. What do I mean by full amount? the amount in which only the trade discount is deducted, and we are doing nothing with the early settlement discount. ABC company sold goods with a list price of 1400 to Green, which was subject to trade discount of 4% and an early settlement discount of 5%. At the point of sale, Green was expected to take the discount. On occasion, Green did not pay within the settlement discount period. So in this case, the invoice, what was the invoice? The invoice were prepared with the discounted amount, but then now she's giving me the entire amount. Debit cash, credit trade receivables, and credit revenue, right? Because now she has to pay me the entire amount itself. So try solving this. Your answer is going to be B. Debit cash, credit trade receivables, and credit revenue. So that is it, guys. We are done with the exam kit of the chapter sales tax, discounts, and purchases tax. So we are done with this. If you still have any doubt in this question, and if you still feel like you did not understand anything in this chapter, then watch the video again and revise the chapter, and go and check out the study text explanation videos as well. I will link all the playlists in the description box below. Okay, now we are going to be starting with the inventory. So let us start with inventory. My inventory starts from here. Okay, so before we start with the questions, as always, we are going to first discuss the entire chapter and let us revise all our formulas. Once we are done with that, we will start with our questions. Okay, so inventory. If you can recall this chapter, what did we study in inventory? Again, make a note of all the formulas and revise it with me. Otherwise, there is no point of watching this video. If you can remember what sales was, sales value is always equal to revenue, right? They are the same words. And you remember we had something which was the opening stock. And what was opening stock? Opening stock is the same as opening inventory. So these are just other words for the same word. So in the question, if you are given opening stock or opening inventory, both of them mean one and the same thing only. So do not get confused whenever such a situation takes place. Please make a note of this. And the same way, closing stock is the other word for closing inventory. So this much you guys can recall. And do you remember we also studied something called as net purchases? So what are net purchases? Net purchases are basically purchases only, but we deduct purchase return from it. What is purchase return? When we purchase something and we return it back. That means return outwards, right? And you guys recall what was return inwards? Return inwards is the same as sales return. Okay, after this we had the formula for cost of sales, right? You remember cost of sales was the same as COGS, which is basically cost of goods sold. Let's not get into that, but that's just another word. So how do you find out cost of sales? Opening inventory plus net purchases minus closing inventory. This will give me my cost of sales. So how do you find out the cost of sales? Opening inventory plus net purchases minus closing inventory. Okay, and what was net purchases? We just did that. Purchases minus purchase returns. Okay, How do you find the gross profit? Logically think about it. If you do not recall anything which we are studying here, please go to the description box and check out the study text video and watch that and then come back to this video. Sales minus cost of sales. This will give me my gross profit, right? And what is sales? Sales is basically revenue. Revenue is generated from sales only, right? So whatever revenue you get minus the cost of sales will give me my gross profit. Okay. Now the next topic is the opening inventory and the closing inventory journal entries. You remember how we learnt it? You remember the journal entry. Always remember that the opening inventory assets have to be removed this year. So what will my journal entry be? If I have to reduce the assets, I will credit them, right? Inventory assets. Okay. So whenever I'm talking about opening inventory, I need to keep in mind that I need to remove the opening inventory from the assets this year. So I'm going to credit the inventory assets. I will debit the cost of sales. And if I'm talking about closing inventory, the opposite. Closing inventory assets, the closing inventory will always add to my assets. So I'm going to do debit inventory assets, credit cost of sales. Okay, these are the journal entries to keep in mind. After this, now we basically have the methods now. After this, the next topic was the methods of calculating inventory. The first one, if you can recall, was FIFO, which is first in and first out, right? After that, we saw what periodic was. No, after that, we also saw the unit method, right? And then we saw the AVCO, which had periodic as well as continuous, right? So you remember the methods. I hope you're making a note of this, then we can move ahead. Okay, so here you recall what FIFO method was. FIFO method was my first in and first out method, right? And first out. So what did we do in first in first out? We always assume that whatever stock came in first, that will only go out first as well. This is what we saw in the first in and first out method, right? So if I on first, let us say on 1st Jan, I had 8 bottles. On 4th Jan, I purchased 2 more. On 10th Jan, I purchased 10 more. And on let's say 16th Jan, I need to make a sales of 20. I need to make a sale of 2 bottles. So will I subtract 2 from the purchase I made on 1st Jan or here or here? always we will follow the rule of first in and first out. On 1st Jan I will be subtracting 2 bottles. This is what we discussed, right? So now that is over. So that was my FIFO method. After that we had something which was the average costing method, which had two types. One was the periodic and the other was the continuous, right? And in periodics, you remember that in periodic we had one particular formula which was cost per unit. So we had cost per unit, which was total amount of purchases upon number of units. So this would give me the cost per unit. This was the formula which we used to use in periodic, if you can recall that. And now let's come to the continuous method. If you remember the continuous method, what did we do in continuous method? In the continuous method, we used to basically make a table, right? With 3 headings. You remember that? This is how the table looked, right? So here let's also have a date column. It's fine. Give me a second. Yeah. So we used to have units, amount and total, unit amount and total, unit amount and total. So whenever any purchase took place, we would write over here, and balance would be the balance so far. So if we added new purchases, my balance will increase, right? And the middle column was always total upon units. You remember that? And whenever a sales took place, the amount will be carried forward from the balance. Again, I'm repeating, if you do not understand this, I'm not going into the detail in this video because this is just a revision video. You have to go and watch the study text video. I have linked it in the description box below. So this was it with our chapter. This is what our inventory chapter is based on. Now let's go back to the exam kit. Okay. An item of inventory was purchased for $500. It is expected to be sold of $1,200. Okay, one more thing in inventory which we missed discussing. So we had something called as cost. So cost was always the initial acquisition cost or the cost of the asset, and the NRV was basically the net realizable value. So if I purchase an asset for $1,000 and today the value is $20 only, so this is my NRV and this is my cost. Okay. And do you recall the concept wherein we discussed that if there is a particular asset and it is said at, give me a second. Yeah. Do you remember that if I say that my asset was bought for $80, I can sell it for $90, provided if I want to sell it for $90, I need to get a repair of 5. So then what is my net realizable value? Will it be 90? No. Why? Because we need to consider the 5 repair. So 90 minus 5, 85. 85 will be my net realizable value. You recall this? And then you compare the net realizable value with the cost. Whichever is lesser, that will be shown in the books, right? Okay. So my cost is 500. Expected to be sold for 1,200. 250 will need to be spent on it to achieve the sale. So that is for repairs, let us assume. Okay. So 1,200 minus 250 950. So my net realizable value is actually 950, right? So 950 or 500, which is lower? 500 is only lower, right? 500 is lower. So my answer is going to be 500 because that is lower. Closing inventory may be valued, give me a second. Right. Closing inventory may be valued using first in and first out method or average costing method, which is the AVCO. Which of the following statements is true, assuming that the prices have fallen throughout the year? Closing inventory and profit are higher using the first in first out. So the prices have fallen. Okay. So the prices have basically fallen. So closing inventory and profit are lower using FIFO, right? Because the initial ones were expensive, but you're selling it at a lower price because the prices have fallen. So my closing inventory and profits are gonna be lower with FIFO. Okay, 91. So that is it for this video because it is already a very long video. In the next video, we will be finishing the inventory and we will be moving on with another chapter as well. So if you have any doubts, you can drop them in the comment section, and you can also check out the playlists in the description box below. Thank you.